infrastructure and construction company Aecon Group reported higher fourth quarter profit and revenue after the market closed yesterday, but earnings missed expectations and the stock is sliding today. Aecon Group works on projects on both sides of the Canada-US border. For more on the stock and the company, let's talk to an analyst who covers the stock. Ian Gillies is Managing Director of Equity Research at Stifel. Ian, thanks a lot for joining us. First of all, I guess let's talk about today's market reaction, fairly negative on the stock. What are investors seeing that they don't like?
Well, first off, Paul, thanks for having me. I think the first concern that they're having is that the margins for the quarter were a little weaker than people would have thought. This is driven through both their construction segment and their concession segment, where the company invests in large infrastructure projects in Canada, the US, and in some cases in the Caribbean. The second part of that relates to the 2025 outlook, where I would anticipate margins are going to be a little bit weaker than people would have thought, just given their duration of time to start certain projects, once again, particularly in the concessions business. But as we think about 2025 and the key themes we tend to like as it pertains to the engineering construction stocks, what continues to hold true is that part of their business is holding in very well. Government spending continues to be elevated to support their business. And as we look out a little further to 2026, our thesis around the stock in that year continues to be relatively robust, as the margin improvement we're expecting should continue to bear some fruits, albeit perhaps a little lower than we would have thought previously.
Yeah, and I guess you're partially answering my next question. You have a buy rating on the stock. You refer in your note on these results to your bullish thesis on the stock, but these results have given you some pause. Specifically, just address what in these numbers has caused you to perhaps revisit your bullish thesis.
Yeah, so our buy rating and $31 target price were obviously done prior to last night's release. We'll update targets and estimates and the like once we publish new numbers. The particular piece in this release that gave us some pause for concern was the company's joint venture segment, or the concession segment. As previously mentioned, our suspicion is that there are certain projects in the Caribbean that are going to start a little later than we would have thought. And that work hasn't gone away. It's just shifting to the right. And given the uncertainty in the broader market today, when anything shifts to the right and or gets delayed, it does tend to create a negative share price reaction, such as today.
One thing investors watch very carefully on companies like this is the backlog. What is the state of the backlog at Aecon?
The backlog's great. It exited the quarter at $6.6 billion. It hasn't been that high since prior to COVID. The other interesting thing as it pertains to the backlog, there's two large projects, one related to nuclear in Canada and another related to a large transit project in Ontario that haven't yet been added. So that backlog should screen much better come 1Q25. And that's really why we say, like, some of the concerns around today aren't around top line revenue growth. It looks to be very strong. I think some of the questions that come out today is where do margins shake out and how does that flow through to the bottom line?
Okay, I gather there was some, you say in your note there was some new commentary from the company on tariffs, but nothing terribly specific. What did the company say, and explain to our viewers how exposed the company might be to tariff actions in the United States?
Yeah, it's a very challenging question at this time. The best way I would address it is the commentary was just suggesting that as a result of anything that's put in, project costs may increase, which I think everyone's well aware of. And the other obvious outcome that could come from this is that project startup timing could shift to the right, because as costs go up, re-engineering may need to occur. You may lose some of, call it the lower ROI projects in your backlog just because people aren't prepared to move forward with them. And so I think it really, for tariffs at this point, the way I tend to think about it is it's more of a timing related item, and perhaps some projects get removed from backlog in the future. But quite frankly, it's too early to say whether that's going to be the case, but that is the risk.
The company would be defined in the United States as a Canadian company and therefore perhaps subject to some level of tariffs. Is that a fair generalization?
No, I don't think that's fair, because largely what they're doing in the United States is people on the ground. Largely where I think there would be some risk for this company is on input costs to build projects, which isn't quite subject to them. It's really subject to the people that they're buying them from. So what this boils down to is the derivative impacts to Aecon's business and the costs of the project and the costs as it pertains to the project components.
Okay, you see, with respect to the backlog, you highlight the Scarborough Subway Extension project. That's here in the Toronto area, of course, and the Pickering Nuclear Refurbishment project, which is also, of course, in southern Ontario, not too far from the Greater Toronto area. How important are those two projects to this company's near-term future?
They're meaningful, but one of the benefits of a construction company like Aecon is that they're reasonably well diversified. So, for instance, on nuclear, which is one of the great parts of their business, they're doing a lot of work on Bruce Power. They're also working on Darlington and helping, potentially helping with the SMR, the small modular reactor build there. And as it pertains to the construction side in Scarborough, well, that is a very large project. Aecon is also one of the main project components on the Ontario corridor refurbishment, and they are one of the preeminent construction companies in the country. So no one project makes a huge difference, and these are just very good additions that show their capabilities.
Ian, thank you very much for your insight. Ian Gillies is Managing Director of Equity Research at Stifel, and as you